Hey everyone, it's Thursday morning, February 20th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Let's get started. Before we dive in, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, another record high for the Standard & Poor's 500. Sounds great, right? Well, there's more to the story. The stock market yesterday closed slightly higher, but there's plenty of uncertainty in the air. The Standard & Poor's 500 edged up by 0.2%, reaching a fresh record of 6,144 points. The Dow Jones and Nasdaq also posted small gains of about 0.1%. The big news? First, we had the Federal Reserve minutes from their January meeting. The takeaway? No rush to cut rates. Most Fed officials agreed that the economy remains strong, inflation is still somewhat elevated, and rates should stay at restrictive levels for now. However, they also signaled that if the labor market weakens or inflation cools faster than expected, they could consider easing policy. One key risk they flagged: trade policy. And that brings us to President Trump, who has been rolling out tariffs faster than investors can process. Late on Tuesday, he announced plans for a new round of duties, this time targeting autos, semiconductors, and pharmaceuticals. The number? A flat 25% tariff across the board, starting as soon as April 2nd. That's on top of last week's 25% global tariffs on steel and aluminum, set to take effect on March 12th. And let's not forget the existing tariffs, 25% on Mexico and Canada, coming next month, and the 10% duties on China that have already kicked in. Markets have been trying to digest all of this, and so far they've taken it in stride. But the real question is, how will this impact inflation and growth? Higher tariffs mean higher costs for businesses, and the Federal Reserve is already watching closely. If inflation picks up again, that could delay any potential rate cuts even further. For now, investors are holding steady, but volatility could be right around the corner. The next big test? The upcoming inflation reports and any further details on trade policy. That's it for today's Capital Markets Quickie. Thanks for listening, and I'll catch you tomorrow with the latest market updates. Cheerio!